Hey, this is Market Moves coming at you. We just went over Lyft's IPO and what the company does, what the valuations look like. Now it's time to go over Uber's. There's going to be a heavy debate going on this year whether to invest in the Uber IPO or the Lyft IPO. And these two videos are going to be the best indications on which one is the better deal. I have more videos coming out in the future, so please subscribe, please like and comment. I would greatly appreciate it. Check this out. Quick disclaimer, these videos were made a while ago, so I just want you guys to know that this information is still relevant, but the dates I talk about with the IPO are not set in stone in this video. We kind of have a better idea now what the dates are. We have Lyft IPOing March 18th that week, and then Uber is still a question mark. So up until this point, that's what information we have on when those IPO dates are coming out. So enjoy the video, because we're going to go through Uber's valuation and all the company numbers to let you know what you're paying for and what you can get with this company. If this is the first time at this channel, hit that subscribe button in the bottom right hand corner. You won't regret it because content comes out daily. So first off, we're going to go to the revenue of Uber. If this isn't the most bullish chart in the world, I don't know what is. Uber has grown its past revenue 40% in most quarters of its existence. If you look back to 2013, it brought in about $1 billion total, and the next year it brought in about $3 billion. Next year, about $8 billion, and then we jumped up to $20 billion, $35 billion, and $48 billion. So I've broken up the cost and the net revenue here. So the whole bar you see, gross profit of the company. So the bottom portion is the net revenue. This is the money after cost. And the big blue, dark blue portion is the cost that Uber has to accrue each year. So the costs are massive. They have to pay tons of drivers, tons of liability costs, and they have to pay to get into cities, to advertise. So this company spends huge money to make money. This is not the best sign first off, but if you see growth like this, everyone wants to hop on this train. I mean, this is an exponential growth here, and this is exciting. Everyone wants to be a part of this, but you have to dive into the numbers. You have to be more informed about what's happening with the company. So the net revenue has not tripled or doubled. Unfortunately, the costs have doubled and tripled, and the costs are the ones that are increasing the most. Net revenue is coming in at about $10 billion predicted this year. The biggest thing I want you to take away from all this information I'm giving you is this is not public information. All the charts and all the financials that are put out from Uber supposed to be seen. These are all leaked numbers. So what I'm finding is leaked numbers from articles, from websites. So these leaked numbers may not be 100%, but that's okay because you're going to get the big picture today on Uber and the company and the numbers and the valuation. Please stick around for the whole video so you can understand the company in depth, because if you want to invest in a company, you need to take the time to understand it and study it. So net revenue, like I said, this is the portion that can be reinvested, given back to the possible investor of the company, maybe given as a dividend, and this has not been increasing a great amount. Unfortunately, the costs are taking up most of the net revenue. So the gross revenue looks amazing. If you saw this and you didn't know the cost, you would say, wow, this company is doing amazing. They're almost doubling and tripling revenue each year. But if you look into it in more depth, you see they're doubling and tripling cost every year. So costs are up huge since 2013, 2014. And right now, this company is kind of flatlining with net revenue, and they're kind of flatlining with the gross revenue as well. The numbers that have been coming out have been slower growth than previously. So why would they IPO now? They would IPO at this point in time because money in the market is at an all-time high. People are more risk adverse. They're looking to throw money at things, and they are. And Uber is showing some of the best numbers in history, and their growth is the best. So if they want to IPO and capture all this money, now is the time to do it. But if they think their costs and their net revenue are going to if their gross profit is going to start flatlining, so gross profit flatlines, growth flatlines, they want to get in before that shows on the financials and on the balance sheets. So they want to capitalize on their valuation as quickly as possible. And I'm going to show you in the last slide how crazy their valuation is. But again, I'm not bullish or bearish on this company. I am neutral. Don't think I'm telling you not to buy it or to buy it. I'm just showing you information that should help you make a better educated decision. So now we know what the cost and the net revenue of Uber are. We're going to check out the net income. This is what goes to the investor. Not directly goes to the investor, but in theory, this metric for talking about companies, net income, is what we value companies at. So right now, the net income for Uber has been a roller coaster. We were unprofitable in 2013. We found profitability 2014, 2015, and then Lyft has taken lots of share and it's had to up the advertising cost, and Uber is now unprofitable, largely unprofitable. So they're losing $2.8 billion in 2016, $4.8 billion in 2017, and a projected $4 billion in 2018. But these numbers, again, are not public. So these are all leaked numbers, and these might not be the most accurate numbers. But from most websites, I've seen these losses in the last couple years. 2018 can be plus or minus $1 billion, honestly. And this just shows you that for a company that is bringing in $40 billion, they're losing $4 billion somehow. That means they're spending $52 billion to make nothing. And this is crazy. As an investor, you want to see the company making money so they can reinvest it back in the company and eventually pay you with a dividend. Maybe it doesn't pay you with a dividend, but if the company is making money, it goes back into the company, it reinvests itself, and it grows exponentially throughout time. It can do R&D, it can make new products. So Uber is just spending and spending and spending, and it does not look good in terms of net income. The investor will not like this. Value investors will stay away from this. And IPOs, for some reason, are just super unprofitable. So I don't know why they like to IPO during this time in the market, but right now, people are still dumping money into these companies. So the last slide I'm going to show you is the very, very important one for all the investors that want to buy Uber or that want to know the valuation. So if you want to know the valuation of Uber, check out Uber's valuation for the last 4 or 5 years. So I haven't got the best info on 2017, but this is insane. Look at this. We got 2013. We were valued at about $3 billion. We 6x'd from there to $18 billion in 2014, 2015, $50 billion. At around this point, for 3 years, the valuation has pretty much stayed the same. It hasn't increased or doubled or tripled as much as the previous years. So during this time, what was happening? Well, net income was insanely down and it was dropping and dropping. So valuations were not increasing because net income was just ridiculous and they were losing a ton of money, and at this point investors are going to be like, why would I invest in you? So the valuation for this point in time was flat. And if you're thinking about investing in Uber, think about this. If the investors were excited about Uber, how come the valuation didn't change for 3 years? And then why all of a sudden did it double? A possible projection of doubling. It's supposed to open up the IPO valuation at $120 billion when it IPOs in 2019. So this should be 2019, honestly. So ask yourself this: why was it 50 to 60 billion for 3 years, and why did it double to 2019's valuation of 120? Well, the answer is it's going to IPO, or it wants to IPO, so they get a huge premium on the valuation once it IPOs. And when they start losing this amount of money, value investors, regular investors aren't interested. And if it's going to double the valuation from when people weren't interested, why should you be interested in this company as an IPO? That's a question you should ask yourself. I'm going to say that one more time. If the valuation doubles just because it's IPOing, and for the last 3 years before that it was flat, why should you be excited to get in? You're paying double for something that people didn't want to pay anything for. Pretty much very cautious, staying away from this when it was losing tons of money. So it's still losing tons of money. People are still cautious, but now it's going public, it's IPOing. Now it's going to get hyped up and the valuation is going to spike from here, unfortunately. So as a huge value investor or a long time investor, be very cautious looking at IPOs, especially something like this. So this is Uber's financials, and I'm going to say this. These numbers are all from different websites. Nobody has put together a more in-depth analysis on Uber. So please, please, please share this video. I would greatly appreciate it. And let's get the knowledge out there, because IPOs can be dangerous and you need to be educated. This is all I got. Market Moves signing off. Peace. For more information on the Market Mover Indicator, free consultation talks, and courses, head to the website marketmovesmatt.com. Don't forget to hit that subscribe button and check out the latest and popular videos I have uploaded.